All right, folks, welcome back. So, this just out, headline this morning, mortgage rates move higher again this week, just like that, again. And why? Because it's been going up for several weeks. The 30-year fixed rate, mortgage rate now sitting around 6.4%, rising to 6.4%. That's about where it's at today. Again, it's not a one-week move. This is now a trend, and it's been the trend for the last 3 to 4 weeks. And just last week we were sitting at 6.3%. So here we go. It's another increase, and you can see it. You can see we're trending upward, and it's not good. That is not good for a housing market that is trying to get its footing. A housing market that, if you listen to the last couple of shows, you can see there's just parts of this country that continue to be very, very unaffordable. And this does not help the situation whatsoever. And it is having an impact. There's no question about it. It's having an impact because at the same time, mortgage applications are going down. In fact, they dropped quite sharply, down about 10% this week. And again, also just like rates going up, mortgage applications are going down. And you can see in the data, applications continue to get weaker and weaker as rates have been moving higher and higher again over the past several weeks. This gets put out weekly. This data gets put out weekly by the Mortgage Bankers Association. That's the MBA. And you know, if you're following any of these financial sites, you probably got a headline and saw it. That's bad because we were not that long ago just around 6%. Some folks were getting 6.01% for a 30-year fixed mortgage. All right. I'm going to get into why I think this is happening. So for those of you who are longtime listeners, you know I follow the 10-year Treasury yield very, very closely. As the 30-year fixed rate for mortgages are essentially almost correlated to that 10-year Treasury yield. And you can see, if you were to look that up on any of these financial sites, you can find that on CNBC, Yahoo Finance, so forth, Bloomberg, if you like, and you can see that it's been moving higher. It's sitting right around, at the time of this recording, right around 4.33%. Okay. And it's been moving precipitously higher over the last several weeks. Now, why does the 10-year Treasury yield move higher? Well, that's the bond market. The bond market, separate from the stock market, there's the bond market. And the bond market, when yields go up, it's basically telling you that the bond market is starting to price in something. Okay. And that something, in the case of it rising, is that inflation. Okay, the idea of inflation, let's say, because it's pricing it in early, the idea that inflation is here to stay, and it's going to go even higher, and it's going to be maybe higher for a while. When inflation goes higher, that's a direct correlation to the Federal Reserve, and that means, hey, we're not going to be cutting rates anytime soon as inflation goes up. That's the last thing they do in that situation. So if anything, they might raise rates, right? It's even scarier, right? So the 10-year, the bond market reacts accordingly. And so that keeps interest rates high. That's all correlated to all those rates we've been talking about. Now, there are several factors for this, but I couldn't help but realize that in the last several weeks, we have a war going on. The United States, Israel, and Iran are at war, and that has caused a lot of let's call it geopolitical tensions. It's caused, if you're following the news, the Strait of Hormuz. Obviously, they're unable to get oil in and out of the strait. Anyway, the point is that that's raising the price of oil, okay, which raises the price of gas. And as oil goes up, you know, it costs you more to gas up your car. It costs more to fuel up airplanes and ships and so forth. And so even shipping can go up. All that just, it's inflationary, right? It puts pressure on inflation. And so I am not suggesting that it is a direct reason. There are multiple reasons, but I am suggesting that it's a contributing factor to, I think, why we've been seeing mortgage rates go higher in the last several weeks, because it is related. And you can see the bond market reacting kind of right around the same time as the war began, and now into what are we now into almost 4 weeks later into the war. Now, one thing I want to reiterate here is that, as you can tell, mortgage applications are lower. I want you to think about this for a second. It doesn't mean that folks see a headline and go, I'm not going to, go buy a house anymore. I'm not going to buy a property anymore. Some investors might do that. But what it impacts are those actually applying for that mortgage. And they thought that they could afford the house they were going to buy. And then suddenly, here came some paperwork there. It can happen, listen, right after they put in an offer on a home. It could happen during the whole process. It could happen several days before closing, where they're told, listen, rates shot up from 6% to 6.4% since you put an offer on this particular property or home or whatever. And oops, that monthly payment just shot up, whatever it shot up, right? It went up higher. And so it prices people out. It's not about... it can be spooky and scary for some people, but it's a little bit more about that. It's more they just got priced out. Whether it was income to debt ratio changed, so underwriting came in and said, well, this is not affordable for you anymore, and that kills the deal. That just kills the deal right there. Or it's the consumer themselves saying, whoa, I thought I was only going to pay $3,000 a month for this mortgage. Now it's $3,400. I don't think I want to do it anymore. Right. So this is really important to understand the psyche of what it does, but it's not just the psyche, it's actual impact. And that's why you see mortgage applications plummeting here in the last week. All right. At the end of all this, though, I'm going to tell you what I think. I think that it's not sustainable. That is, the price of oil continuing to climb higher. I don't think this is sustainable long term, but at the same time, I don't know, right? It all depends on, just where this goes, where this war goes, where this geopolitical tension goes in the Middle East. It all depends on that. No one really knows, right? But if you believe the rhetoric that's been coming out of the White House recently, if you believe in I think the latest headline was a sort of a 1 month stalemate, 1 month just sort of, we're gonna sit back and we're not gonna fight anymore, like a ceasefire, I guess is what they called it. But if you believe all that, okay, and you can actually see the effects of it. You can see kind of oil is starting to fall after a peak there, a little bit over $100 a barrel. You're starting to see that happen. So I believe that the White House does not want a long, prolonged war. I don't think they would want this war to continue. It's not good domestically when you start talking about the same administration that wants inflation to come down, rates to come down, the same administration that wants to make housing affordable. It goes completely against all those things they're trying to accomplish. So I would think they don't want it. So I would think that this might be just a temporary spike here that hopefully brings its way back down, and even stabilize at some point. And we can get back into, this housing market that needs to start picking up, and picking up real soon, because as you can see, affordability is still a challenge for those would-be borrowers who do want to get involved in the housing market. That is it for me today. Thank you so much for listening to today's show. And as always, if you have questions or need specific advice, ideas, or just some help regarding your particular real estate needs or situation, or if you're just looking to buy or sell real estate in Florida, well then DM me on Instagram at the Salib Group, or just send me an email to mark@thesalibgroup.com. Don't forget to leave a rating for the show, follow, subscribe, help others find the show, and be informed and educated about the real estate market just like you. Until next time.